Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. This week's video is going to be summarizing the first week of November, and it was a crazy one. Probably one of the craziest I've had since I've been an investor. So we ended last week on £140,122, and we ended this week on 135,377 for a 3.3% loss, which equates to minus £4,745. At its worst, on Friday, I was down £8,623. So a pretty rough ride. Now, was I worried? No. When I see dips like this, I'm pretty much never worried these days as an investor, because the companies that I hold within my portfolio are very solid ones. And these kind of drops within the market are normal. In fact, they're actually healthy, because if it goes up in a straight line, it means that at some level, there's going to be a far bigger crash that might not then recover. But these kind of drops from time to time are good for the market, actually. In fact, these are the times where within the stocks that you have conviction in, then you should be buying some more. And worst case, you just do nothing. It's like seeing an incident. If you're driving, seeing an accident, you just drive by. It's got nothing to do with you. And this is how I feel about these. So there were some buying opportunities for me. And one particular one that stood out was Robinhood. So Robinhood had earnings last week, and they reported revenues of 1.27 billion on expectations of 1.2 billion. So a beat there, and they had net income of 556 billion, up 271% from the prior year. So really solid earnings. Diluted earnings per share of 61 cents on analyst expectations of 51 cents. So really solid beat. And then what happened to the stock? The stock dropped from $141 all the way down to 129, 130. So for me, it became a very good, very strong buying opportunity. Now, one of the reasons was the whole market went down as well. But these days, just because a company beats doesn't always mean the share price is going to go up. Sometimes you have to beat really solidly. However, if you look at the total year, it's up over 300%. So a drawback is also a natural occurrence. But I thought this was a slam dunk buy opportunity. And I wrote here on my Substack is Hood at these levels is a slam dunk buy. And then I edit it saying I trimmed some Imperial brands and bought £1,500 more in Hood shares. So I ended up getting another almost 15 shares in Hood, because I think this is a generational company. I'm really bullish about this company. They have about 11 different revenue streams, all which are generating over $100 million each. And they are yet to launch banking and tokenization, which are the next big things for them. And the execution of this team, including Vlad Tenev, the CEO, is really solid, and I'm really bullish about it. I'm very happy that it's the second biggest holding that I have, and I'm happy to increase it at this prices. So as mentioned, I did sell about 1.5k worth of Imperial brands. So here's the sale. So the order executed in 2 trades. First one for 42 shares for a £571 gain. And then the second tranche of just over 5.5 shares for another £75 profit. So I've sold at pretty much the height. I don't have much more money left within my ISA to deposit. So I have to trim in certain areas, and also trimming Imperial brands, which is, if you look, it's at an annual high. So it's not a bad time to trim, actually. This is a large position of mine. To take off some profit is also a decent thing. Now, if you watch my videos, you know that this company, HIMS, is on the watch list for me. It's been having some lukewarm performance. And last week they had their earnings report. which was huge for me to see whether I want to keep investing within this company. And overall, it was a good earnings. Hims and Hers tops revenue estimates as telehealth provider attracts more users. Now, this is a big one in terms of the revenue was so important because their major revenue contributor, which is weight loss, was coming under increasing pressure. So I wanted to see whether they can, diversify a little bit and also fulfill some of these revenue expectations. So they beat on that, which was the crucial element here. So revenue came in at $600 million with analyst expectations of $580 million. So this was a really important thing. Now, on top of that, the CEO, Andrew Dudum, made a post on X with some important metrics. So revenue is up 49% year over year. Adjusted EBITDA is up 53%. And they're still maintaining guidance of a 2030 target of $6.5 billion in revenues. On top of that, they are due to or have just recently launched new categories in testosterone and menopause, which are going to be good drivers going forward. They have lab testing, which is quite a crucial one because this is where they're going to potentially identify risk like cancer early, which is really, really valuable and beneficial. And they're saying it's going to cost people hundreds, not thousands. So if they can get that right, this becomes a huge revenue generator. Also, they're going to be launching peptides, coenzymes, GLP, GIP supplements. So these are all bullish indicators. Also, they're going to be launching in Canada soon. So another big revenue driver for them. So I'm not as bullish as I once was on Hims, but with this earnings report and this kind of guidance and these new products going to be launched, it still is going to stay within my portfolio for at least one more quarter. So that was a good thing. Now, as I mentioned, I made the announcement that I was going to be buying Hood as I did it actually on my Substack. So if you want these kind of notifications, if you want to follow my trades a bit more closely or strictly, so your portfolio looks exactly like mine, then please register for the Substack. You can either scan this QR code or click this link and you can get there. And while you're there, if you can, give this video a quick like so it can help grow the channel. Subscribe to follow my journey to see where I get to. And I really appreciate the support. Now, as I always do, here is the weekly profit and loss for each holding that I have. As you can imagine, with the 3.3% loss, most of the holdings will be red. The biggest losers were Hims. I just realized ASML was a bigger one with minus 12.65%. So quite a lot of red, as you would imagine, with the whole market going down. But it's interesting to see what kind of stocks do okay when there's a whole market meltdown, which means in future they might be worthy of having bigger holdings within the portfolio. So the ones were IREN, which announced a big deal with Microsoft early on in the week. And then you've got Imperial Brands, the tobacco company, which generally does well when there's market turmoil. Costco, which is quite surprising because it's a retailer, which there's quite a lot of pressure on them, but it was up. And the other one was Amazon, which was still, I think, moving up with the excellent earnings last week. So on the whole down, but let's look at the overall positions. So Google still my largest holding. We're up just over 7K for a 66% gain. Robinhood, I just added to this. And as mentioned earlier, I'm really happy that it's my second biggest holding. I would be happy even if it was my biggest holding, actually. I'm really bullish on this company. I think this is going to go from strength to strength. So up 18% for just under 2K. And I've increased my holdings to 125 shares. Meta had a tough time with its earnings report. But again, solid company. Imperial Brands, a solid performer. Trimmed a little bit to pay for the Robinhood additional shares. This one is a star performer. Up almost 3.5K even after trimming, and I've trimmed it a few times before as well, up 76%. Visa up just under 10% for a £630 gain. Microsoft getting close to the 1.5K in terms of gains mark. MasterCard up just under £500. I'm expecting both Visa and MasterCard, especially with the Christmas earnings, to push on a bit beginning the next year. So let's see how they do. Nvidia at a £6,500 holding. Let's have a quick look at that. So I hold 45 shares and it's had a very solid year at just under 30% even after the recent downturn. So I think the market's going to recover again next week. So these holdings will increase. Tesla next, up just under 100% at 3K gain. Carnival up 2.5K for just under 75% gain. Broadcom up just under 85%. IREN, as mentioned earlier this week, announced the Microsoft deal and went as high as $80 per share and settling at the end of the week at $63. And now I don't do too much technical analysis on this channel, but if you look at IREN, actually, the stock has generally traded above the 200-day moving average, as you can see up here. The 200-day moving average is this purple line. And right now it's performing underneath. And so me personally, I think there's going to be a bounce back for it to trade around there. So if you want, you can start a position and I think it will bounce back soon. Oscar Health up 11%. There has been some issues with the ACA Act. This is why you've seen Oscar Health and also United Health having a bit of a tough time. But once we get a bit more clarity after the government shutdown is ceased or there's some kind of deal, then I think you will see both of these going up too. Amazon up 30% for a £1,100 gain after their smashing earnings report. United Health, just mentioned just now, down just over 5%. BMNR, now this is one that has been struggling. But again, I think Ethereum is going to have a solid end of the year. And you will see this one recover too. Grab down 5% for a £234 loss at the moment. HIMS, I think in the future is still going to do okay after the earnings that they have and the guidance that's been given by the management. So if people want to increase their position on this one, this is also okay for me now, in my opinion. Centrica up 57% for a £1,200 gain. Costco up 16.5% for a £327 gain. Apple, KLA and ASM are all small holdings of mine and they're all up. So yeah, all three of these are on a good upward trajectory. So that's it. That's the overall portfolio, currently standing at 135,377. Tough week, but these are all part of being an investor and hopefully next week is more green. Thank you very much for watching this video and I'll see you on the next one.